And Anuj Singhal. We've had green practically all over the screen in Asia and largely in Wall Street, maybe more of Nasdaq. And today may be a more stock-specific day rather than looking at overall markets. Our attention will be grabbed by Infosys, Asian Paints, Hindustan Unilever, and of course, because of overnight news, Sun Pharma and Bharti. So it may be a day of specifics rather than macros.
Oh yes, it will, absolutely. And this is one of the biggest days as far as earnings is concerned, right? I mean, you have 5 nifty companies coming out with numbers. You have so many influential mid-caps coming out with earnings. But how is trade set up at this point, Latha, both macro and micro?
Well, it does look like at the moment risk appetite there's no stopping it globally as well. You're beginning to see, or not beginning, I mean, it's something that's been prevailing for a goodish bit now. And it actually the manner in which asset classes have moved certainly puts India at an advantage. Crude, for instance. Just in the last couple of days over the weekend, I was looking at the growth data of emerging markets in Latin America. I mean, it is smashed to bits. They were all growing at 4-5% for a better part of the 2000s. Now, because they're all commodity countries, you know, they're all smashed to under 1% GDP growth. In the EM basket, there is no taking away from the fact that we are hands-down winners, which perhaps explains the slow trickle of FII money, which is now becoming almost a flood. You know, the pro rata of flow is what, 700 crores plus a day, clearly seeing India as the winner. And now gold getting bashed up like that is a very important India positive from a domestic angle. It will mean more financialization of savings. So though yesterday was a DII negative, every fund manager tells you that for the next 4-5 years, we are going to see more funds flowing into mutual funds and into financial savings. Maybe FDs, maybe, ULIP kind of insurance products. But clearly, the fall of gold is going to be positive in terms of more liquidity for India investments. And then, of course, we are starting off with the monsoon session. It will be a riotous session for sure, with the opposition going after the government for all the corruption charges. But still, it looks like the land bill, the GST bill appears to have gotten into, a best possible political solution under the circumstances. It's not at least regression. It's taken one step forward, however tentative and however half-baked. And I think the markets in this current mood is going to drink in all this as positive. And of course, finally, you will have one lame element in this market, and that's going to be banks. They will pay for the past sins, and the rest of the market, my sense is going to look forward.
Oh, well, that's true. I mean, we have a lot of big earnings to look forward to, and I think that the market sentiment, at least in the first half, will be dominated by what Infi does. Last quarter was a disappointment for Infosys. So, and after what we saw in terms of muted growth from TCS, there's a bit of caution in the system as far as Infi is concerned as well. In fact, not just Infi, if you look at what the data was yesterday, the domestic institutions sold about close to 900 crores in the cash market, more than the FIIs bought. So that just goes to show that they are approaching this earnings season with a bit more caution. In fact, there was delivery-based selling of around 200 crores in names like ICICI Bank, HDFC. There was delivery-based selling in Tata Motors, and the sentiment in banks has been hit quite a bit, so there's no leadership for the market now. Clearly, if the sentiment in IT gets hit as well, then this market will struggle to see gainers. And Sun Pharma, of course, has issued that profit warning. So from the pharmaceutical space too, sentiment could be dampened this morning. Anuj, morning, what's the sense you're getting? Because today, as we've been harping, is one of the biggest days as far as earnings is concerned.
Morning, Sonia. It's actually not one of the biggest days. It's the biggest day in earnings calendar, right? I mean, you have look, I mean, on a day when Hindustan Unilever and Asian Paints become sideshows, you know the kind of day that you have, and that's because Infosys first thing in the morning and HDFC Bank in the middle of the day. Both have the potential to move the market by 50 points. If both earnings are good, the Nifty moves up 50 points. If both are bad, Nifty moves down 50 points. If they balance each other out, the market stays there.
Normally, it's a very predictable set of numbers.
It is, but you know what? I mean, the kind of private sector bank sentiment that we have, any good news will be lashed up. Any minor negative in HDFC Bank will be seen with microscope, and the market will be saying, look what's happening. So it's all about the market sentiment. Right now, you don't have that much of a positive sentiment for private sector banks as well. And I think we have to take this Sun Pharma move news a bit more seriously, because it's the largest Sun Pharma stock. And what's curious for Sun Pharma is, I think on the channel we have 2 or 3 days back someone giving a sell call on Sun Pharma. I think it was Rahul Mohinder. I don't know who it was, but someone gave a sell call on Sun Pharma saying that technically the market is indicating something negative is coming for Sun Pharma because it corrected from the first correction was from 1200 to 930 when the Daiichi deal took place. After that, the recovery, and then the stock went to 828.30, and now it's back to that 930, 940, and this is the zone in which there was some selling which was expected, and now that news has also come. It has 3.5% weight in the index. In the worst case scenario, if it falls at 10% today, you're talking about a nifty move of 25 points. So bulls will have to negotiate a 25-point move purely because of Sun Pharma first thing in the morning, if indeed the derating is to that extent, because we've seen in the past that's how Sun Pharma moves.
8% fall, we should expect a 25-point cut in the Nifty.
The 25-point impact on the Nifty. Okay. The rest of the stocks could well take care of that. Bharti will move positively. A couple of other stocks will move positively.
I was actually coming to that. I think Bharti is going to be very positive. There are a whole lot of investors, big ones actually like Sanjay Bhattacharya, Ramdev Agarwal, who are really angry with Bharti for it not being able to shed its African weight. So this news, I think,
this news will be positive, but you have to keep in mind Bharti stock has rallied quite a bit. So the market had a bit of inkling of what could be coming. So that's for individual stocks. Yesterday's data, I think this DI selling has to be now taken a bit more seriously, because in the medium term, really the DIs are the savvy lot. It's telling you that the market is not going to go to all-time highs pretty soon. It still requires a lot of effort, though practically with the Nifty Junior and mid cap at all-time highs, you have a broader market already at lifetime highs. But still, for the index to go back to lifetime highs, you still require some bit of push. Delivery-based buying is still lacking in this market. Now, one thing, yesterday there was quite a bit of selling in index options from FIIs, which means they're playing for some more consolidation. This is not a market in which you want to short yet. Yesterday, if you would have shorted the market intraday, you would have lost money, because at one point, while the Nifty was down 40-50 points, it recovered most of that in last hour of trade. And that's the kind of market. In this market, traders would be looking to buy 30-40 point dip. That thesis changes if Nifty starts to trade below 8,500. Till the time Nifty goes below 8,500, shorting this market could be dangerous, because as of now, this market uptrend is still intact. And today, of course, will be all about earnings. Let's see, whether we have more disappointment or whether we have more positives, because that may well decide the day.
All right. Well, the market has approached this earnings season with a bit of caution, and we have lots of earnings